he's walking such a tightrope right now. If you look at sort of the question about inflation and this idea of inflation being transitory, right? Well, that basically says, you know, I am still going to be watching for, you know, I'm still going to remain slightly hawkish. That's not necessarily great. However, the opposite story of that really is that you are seeing some softness. I mean, the fact that we have no inflation is not necessarily a great story. We don't have much consumption. Consumption is low. And I think, you know, Powell also mentioned that some of the kind of pause or slowness in consumption and investment really had to do with China trade talks, and as soon as those wrapped up, then that could lift, and in fact, we could actually see kind of some sentiment, some positive sentiment come back into the market. So yeah, you're right. That definitely is not a Fed that's about to cut.
And we've got a market that is pretty much at or near record high, depending on the major index that you can pick out. Is this a market that deserves to be at a record high?
No, you know, Brian, you know how I feel. I don't think that this market deserves to be at a record high. I think that there is actually a tremendous amount of overvaluation in pockets of the market. But interestingly, there are pockets of the market that are not necessarily overvalued. One of the things that Powell mentioned that I think is worth paying attention to is the idea that the Fed might actually change the maturity profile of the Fed's balance sheet. So rather than mirroring the market, the Fed might actually choose to buy more shorter term or shorter dated bonds rather than the exact mirror of the market. Now, that would be interesting because you're seeing actually some really good price movement out of the financials. And if he does that, he's going to steepen the curve even further. And that would be great for financials who are already getting a kick from the IPO market and the fact that the curve is finally steepened. If you push that short end down, well, that's going to be an even bigger boost to the financials.
I can't remember the movie, but there's some line where it's like, deserve ain't got nothing to do with it. I mean, if we see financials start to move higher, Gina, the banks finally taking off, can they pull this market maybe even kicking and screaming higher?
You know, I think they could. We're seeing some really unloved parts of the market performing, not just financials, but energy. I mean, you've been talking all morning about all the news around oil supply. The energy markets are actually finally starting to come out of the doldrums as well. So those are two sectors that have largely been unloved that are coming back out, and that could actually be positive. Now, do I think the market deserves to be here? No. But that doesn't mean that that's going to stop it. I mean, we're two-thirds of the way, three-quarters of the way through the earnings season, and you're looking at, we're going to dodge an earnings recession. I mean, given how strong that earnings were a year ago, it's shocking that we're going to manage to sort of eke out 1.5% growth. That's actually heroic. And so, you know, there's also some fundamental story behind this as well.